let's say that we have this high, and let's just say Bitcoin doesn't get through that level, right? But what about in like a couple years from now? What does this tell us? Bitcoin is at 150,000. Now, I know a lot of us want to hear a bigger upside target, but the fact of the matter is let's just say Bitcoin comes down into this level here, right? And you buy at 70,000, and in a couple years, it's at 140, 150,000. Honestly, that's a pretty good return for a couple years.
Hello everyone, this is BTC Insight, and welcome to yet another deep dive into BTC Insight. Before we jump in, make sure to hit that like button and subscribe if you haven't yet. You won't want to miss this.
Zoom out and the tone changes. The macro pattern, the context that matters for the next few weeks to months, still favors the downside. Technically, what we have is a classic bear flag or consolidation structure that historically resolves to the downside more often than not. Don't be fooled by short-term higher lows. Similar micro uptrends have formed and subsequently failed in the past. The chart repeatedly shows short squeezes and bounces that ultimately roll over when the larger distribution or downtrend resumes.
The latest technical analysis on Bitcoin, we're going to discover what the chart is telling us based on the last week of data. No BS, no hype, just the charts. My name, folks, is Gareth Soloway, Chief Market Strategist here at Verified Investing. And as always, I'm here to deep dive into the action on Bitcoin. Let's get right into it without a delay. Number one, what we've seen lately is kind of a sideways to slight up chop, right? So again, very clearly, what are we seeing? We're seeing the bottom about 2 weeks ago now, and then a move up, a pullback, a move up, and a pullback. Now, in the near term, right, we have to divide a chart into two factors or two portions. There's micro, which is the short-term move and the short-term setup, and the macro, which is the longer-term moves. All right, so we're going to do that first by looking at the near-term chart. Now, the first thing we capitalize on is the fact that we have slightly higher lows. All right, low, higher low, and then also a high and a higher high. What that tells us is price is now chopping in a small short-term uptrend. All right, and again, we can see that by putting in a parallel channel right here, and we stretch it up, and you can see again, price is basically holding within this range. And so what does that do for the near term? Like if we were just to say, where do we think price could generally trend over the next couple days or maybe the next week? The answer would be uptrend, upside action, right? So again, neutral to upside bias in the near term. And again, just to kind of isolate this down, the idea is it goes up, it comes down, it goes up, it comes down, and then it goes up, and essentially continues in this until we get a break one way or the other of the trend. Okay, now what we do from there, so we've just projected out the near term, which would be a small upside bias. I mean, you could come down and touch this low end here, but in general, unless we break and confirm below this trend line here, connecting the lowest pivot on November 21st to the lowest pivot here on December 1st, then you have to assume it's going to bounce off of this, but then run into resistance here. Now, again, if we zoom out on this, this is not all roses, right? The reason it's not all roses is because the bigger pattern, the macro pattern here, which gives us the bias for the next, let's say, month or so, is to the downside. And so what you're getting here, even though you're getting higher lows, look at over here. You had a low and then a higher low, etc., and it still broke down. Look over here. Low, higher high, higher low, and higher high, and price still broke down. Do you guys see that? And so you can't just because the near-term trend has started to move up, it doesn't mean that the macro trend has turned yet. Okay, and that's really important to take note of because, again, while I am bullish near-term, meaning that I still think we can go up a little bit more and maybe trade back towards 100,000, we're not out of the woods in terms of the bigger cycle being back where we could see new all-time highs. And that's unbelievably important for us as technical traders, right? Because, you know, as soon as we get any sort of upside, what ends up happening? We see the tweets or the social media posts, oh, we're headed back to new all-time highs. Then you hear the talking heads and some of these analysts $250,000 price target. It used to be December 31st. Now it's been pushed out to like January 31st or February, right? And the thing is though that's all hype and emotion-based analysis. And what we want to do here is look at the facts. Like, ignore that crap, because that honestly gets me in trouble when I go emotional on a trade. It makes me almost always lose money, and I have a feeling most of us have had that experience. When we FOMO or FUD one way or the other, we get into trouble, we lose. So near term, very near term, which is days, neutral to upside bias. However, the longer term is what we would refer to as a bear flag. Bear flags are like this, and then you start going like this, and inevitably the odds favor another move down, okay? And that's really what we have here in the charts. Now, if this does break down, where is our major level of support? Where is Gareth Soloway going to be a buyer? I've already discussed this prior, but I will go over it again. Go back to your highest high from 2021, put a trend line in there, and I'm going to raise it as a box. So we're going to do like a little parallel rectangle here. And now the reason why I'm giving this a range, number one, I'm a dollar cost average buyer, right? And seller. And so ultimately, I would start nibbling probably around $75,000 pierce this low pivot, but then continue to nibble in here in the 72 range, all the way down to the major cycle high from 2021. Okay, so keep that in mind. This is your likely downside target. And we can kind of understand why that makes sense, right? If you look at past cycles, almost always or almost every bull move comes and retests the former bull market high. In fact, even in 2022, we saw it go, Bitcoin did go a little bit below that. So we'll have to monitor that as a technician to see if that's going to happen this time. And it honestly, if the stock market gets fearful enough, it likely will.
On the way up, the major ceiling to respect is roughly the $100 level. There are many intermediate pivots clustered below and around that zone that have previously acted as support and later resistance. Given the number of failed supports in the recent move, the tendency is for any rally to run into that confluence and face rejection. Gareth's practical trading plan. If you're already long and the market approaches 100K, consider trimming or unloading. In his swing service, he plans to take profits there, possibly earlier, e.g. around $97K to ensure execution. Whether to flip short at that point depends on the price action. He'll judge that with the chart in front of him. But the conservative play is to treat $100K as a likely stopping point, unless price clearly breaks and holds above it.
But in any case, we've now projected very near term. This I would call the macro or the bigger pattern is still down, but that's still only projecting out for, let's say, the next couple months, right? Maybe into January, February, you look for this target to get hit. So we've now done very near-term days. We've done the next few months. Now, the bigger question is, what about the next few years? And the next few years is the simplest of all, right? This is the fundamental bull case for Bitcoin, which again has seen it make cycle higher highs. Every cycle we have a big move to the upside and it makes new all-time highs. And so all you have to do is look at that, right? And if we do that, what do we have? Well, we have, let's take our 2017 bull market high. Let's connect it through the 2021 bull market highs. And what we have here, folks, is this trend line. Now, what's cool about this trend line is literally price has never gotten through it, so we have to respect it. But let's map this out, right? Let's say, okay, let's say that we have this high, and let's just say Bitcoin doesn't get through that level, right? But what about in like a couple years from now? What does this tell us? Bitcoin is at 150,000. Now, I know a lot of us want to hear a bigger upside target, but the fact of the matter is let's just say Bitcoin comes down into this level here, right? And you buy at 70,000, and in a couple years, it's at 140, 150,000. Honestly, that's a pretty good return for a couple years. It's just the kicker is if you're buying at the highs and listening to the hype, then you're going to be pretty disappointed. Now, I do want to caveat this and say there's nothing that says, there's nothing written in stone. There's no law that says Bitcoin can't break above that longer term trend line. It absolutely can. But as a technician, my job isn't to hope and dream and say, oh, yes, I'm going to have these grandiose ideas for Bitcoin. It can go to 1 million. I mean, how many times have we heard that? I honestly am a big believer in Bitcoin longer term. But at the same time, The chart has shown us that we have never gotten through that line until it's proven, meaning that until Bitcoin breaks that trend line, I cannot assume that. Do you guys get what I'm saying there? Is like, I hope it does, because then Bitcoin longs that I'm holding will go exponentially higher, but I can't assume that. I have to stay grounded. I have to stay logical. And logic dictates that this trend line, again, high pivot to high pivots right through here, that has been a topping point on Bitcoin. Now, let's talk more about the short term here, folks. Let's talk short term. So what we've done is we've given a max top and we've given a downside target, right? In the let's say mid to longer term, right? This level can be broken to the downside, just like this level could be broken to the upside, but they are both major and must be respected until proven otherwise. Now, how high could this bounce go? I don't see as of now it going above this level here around 100,000. And the reason I say that is because you have so many low pivots that were support, and then it broke down. The tendency is to go back, but that's going to be your stopping and rejection point. And what you can see here is if we bring this over here and we drag this out, let's just say we stay in this consolidation parallel for the next month. Well, look at this. By December 26th, so not even in 3 weeks, if price just stays inside of this, right, and we just continue to go like this, it's up right into that level. And that's my guess of where we start to trail down. And so listen, I want to be fair with you guys. So in Smart Money Crypto is at Verified Investing. It's my swing trade service on crypto. We are long Bitcoin. I have said that I will unload it when we get close to 100,000. So I don't know if I'll unload it at 97 to play it safe, so I make sure to get filled or something. But as of now, that's my goal, is to unload it. Will I go short? I'm not sure. I'll have to look at the chart at that point. But ultimately, again, pure technical analysis, which is logic-based analysis, tells us near term, meaning next few days, neutral to upside bias. By the way, it doesn't mean it has to happen. It's just what the probabilities are telling us. Over the next few weeks or so, maybe the next few months, we likely eventually break down, head to 70-ish thousand to 74,000. I'll accumulate a long there. And then we have to watch to see, do we get a big move up? Can we make do we get an official bottom there? Or do we start to bear flag again? If we get an official bottom, then we have to come back up to 100. If we can take out 100, then it bodes well for us getting back to that trend line that continues to upslope, connecting the major cycle highs. All right, guys. So again, I always try to bring the non-bias, get rid of all the nonsense. I mean, listen, we're all so influenced by hype today. Listen, maybe we're not influenced, but we're bombarded with hype, right? You turn on social media, everything's hype, right? Certain mainstream media. Remember, mainstream media's goal, and by the way, this goes for Fox, CNN, and anything news related. The only reason they're in business is because they're sensationalizing things to get you to watch so that they can sell advertising. If you didn't watch, they'd be out of business because they couldn't sell. No one would pay to advertise via commercials, right? And so remember, their goal is to make you always tune back in. We have to take that with a grain of salt. So again, one side is going to sensationalize this side. The other side is going to sensationalize that side just to get us to get all like crazy. So we have to tune in. You got to be logic. You bring in your logic. All right, action, reaction. You want to hit essentially the stop button between the action. So the action occurs. We want to always react. We want to then instead of reacting, hit the stop button, think about our options, think logically, and then make a decision. That's what technical analysis is all about. It's changing your brain structure to be very analytical, which makes you make the right decision more often than not. Not always the right decision.
Technical analysis is not about fantasies. It's about probabilities and structure. Gareth's message is consistently pragmatic. Near term, there's a small upside edge. Medium term, the bias still leans bearish. And long term, the structural bull case is intact, but must be proven by price action. Trade the micro, respect the macro, and always manage risk.
That's it for today's look into BTC Insight. If you enjoyed this deep dive, hit that like button, drop your thoughts in the comments, and subscribe to stay on top of all the latest insights. Keep questioning, keep learning, and we'll catch you in the next one.